Assalamualaikum and good day. My name is Nurizatul Husna binti Mat ROZALMAN. My metric number is 281613 and I'm about to begin my individual presentation for Financial Accounting and Reporting 5, in which I will be discussing an article by Ekaterina Yu titled Islamic or Partner Accounting and its Comparison to International Financial Reporting Standards. According to Hamid 2003, Islamic accounting is the accounting process that gives relevant information to an entity stakeholder to verify that the entity is continuously operating within Islamic Sharia boundaries and achieving its socio-economic goals. Financial transactions are recorded according to the principles of Islamic accounting, which are derived from the laws of the Islamic Sharia. Accounting services such as auditing financial statement, tax advice, engineering are well represented internationally, as the article states. British American, Continental, South American, and Islamic partner accounting, also with IFRS accounting, are the currently recognized system, with the Islamic partner accounting model appearing to be the most distinct from others, but also receiving the least attention from academics. The primary objective of this study or my presentation is to clarify the function of Islamic banking in the contemporary financial system by contrasting it to the International Financial Reporting Standard and providing positive evidence for its social role in countries where Islam is the dominant religion. The study's premise is that in the present day, there are favorable side effects associated with the convergence of banking system. If globalization presents new opportunities and challenges like the need to obtain fair and reliable information in as little time as possible, then this hypothesis becomes plausible. In this study, the authors tested and confirmed their research hypothesis by using a comparative analysis approach. The study's overarching goal is to differentiate between Islamic banking and accounting that adheres to the International Financial Reporting Standards. Also, the study wants to highlight the benefit and drawback of Islamic banking and to suggest ways in which it can be used to improve society and business. The positive effect of IFRS and other accounting systems convergence are demonstrated by Islamic banking, and the research also compares the Islamic accounting model as an institution to IFRS. The authors tested this hypothesis by contrasting IFRS with Islamic banking on both a theoretical and practical level. The theoretical question relies on a comparison of Islamic banking principles and the IFRS to identify potential options for the conjugation through analogous institutional mechanism. The analysis of zakat and nisab as two major socio-economic instruments are included on the useful below. The author compared Islamic banking with International Financial Reporting Standard based on the following criteria: legal foundation, accountability, ownership of financial assets, social responsibility, accounting procedures, social interest consideration, information disclosure, transparency, and reliability. After that, we move on to the finding summary where the problem is elaborated. The first topic is theoretical foundations of Islamic banking, a system that generates financial information for shareholders and other stakeholders and allows them to have confidence that the organization is functioning in accordance with the Islamic worldview and Sharia is how Islamic accounting is defined. The author argues that Islamic or partner accounting is an integral part of international accounting and thus conveys the notion that the accounting is more than just a practical discipline. When the institutional approach methodology is applied to studies of Islamic accounting, we can see that accounting's role has grown dramatically and that is now deeply embedded in the economic and social fabric of modern society. In such a situation, the norms and guidelines of the accounting system are typically influenced by a single overarching factor. The author continued by elaborating on the two main facets of the religious factors influence on accounting. The first dictates that Muslim accountants should act in accordance with Islamic ethical norms, which require adherence to Sharia standards and guidelines, including several prohibitions, which is the prohibition on paying or receiving interest. Second, the following proper business ethics is essential: adherence to the adli principle and the halal haram code, which is the Quranic terms where halal means lawful, acceptable, permissible, and haram means illegal or forbidden, govern business practices. In addition, this research notes that Islamic accounting, in contrast to Western accounting, is thought to benefit a broader range of stakeholders because it is linked to the interests of society rather than serving the interests of groups. Western accounting, on the other hand, records economic transaction, assign monetary values to asset and liability, and disseminates this data to users. The zakat mechanism is then cited as how accountability is enforced in Islamic accounting. Differentiating zakat from ordinary taxes paid to the state by all citizens, zakat is seen as a religious duty and an act of submission to Allah. And also, according to the Quran, improved transparency is the foundation of Islamic management, which is why accounting is treated as both a secular and religious obligation in Islam. As a result, unlike conventional accounting, Islamic accounting emphasizes transparency. This is due to the fact that Islamic accounting system requires additional information to be included in financial statement in order to assess the activities of the organization in regard to Sharia compliance on top of the usual information. In my opinion, this article is a good article because the author differentiates precisely between Islamic accounting and IFRS, which we can draw several conclusions by comparing the result. To begin, Islamic accounting has a more limited theoretical foundation because it is static and difficult to develop. Second, because Islamic banking is more of a worldview than a financial practice, it can only be used on a global scale in regions where the governing institutions are consistent with the Islam. Third, Islamic accounting has important social implications, so it's necessary to gradually introduce socially important practices into IFRS, first on a voluntary basis and then on a mandatory basis. Furthermore, the author also briefly discussed how Islamic or partner accounting is distinct from other models in several ways. Most notably, its standards and principles are heavily influenced by Islamic law. This proves accounting is not a technical subject but rather a fundamental to the economic and social functioning of any society. The history, current condition and prospect of accounting can be better understood if the field is viewed not in isolation but as part of a larger institutional context. The second way in which religion affects accounting is through its influence on Islamic accounting's ethical standards and principles. The first is for Muslim accountants to follow their own code of conduct. Complying with business ethics is an integral part of the second part. In conclusion, accounting provides a methodology, strategies, and vocabulary for management functions like planning, organizing, motivating, communicating, and monitoring. Accounting has become the language of business and as element of society's socio-cultural mechanism, increasing its relevance. Where accountants do their job, society benefits because individuals can rely on financial facts. Community benefits through responsibility fulfillment. Islam shaped the Islamic partner accounting model, and also Muslims have one overarching duty, which is to serve Allah in whatever they do. Sharia rules, Islamic accountancy, and also Sharia's ethics have influenced accounting theory and practice. Islamic accounting emphasizes accountability, responsibility, materiality, trustworthiness, and adequacy of information. The Islamic accounting system must offer trustworthy, consistent, and comparable information that confirms the organization complies with Sharia law and meets its social and economic duties. In my opinion, both the company's internal operations and its relationship with external stakeholders can gain from adopting Islamic accounting principles in the present period. In a perfect world, an accounting system would be based on the truth, justice, fairness, goodwill, honesty, compassion, and reliability, which are essential tenets of Islamic accounting. Therefore, it can provide additional advantages to the principal, management, employees, society, and also environment, which is crucial in the current period of widespread fraud and poverty. Hence, I can say that this article is a very good one since it contains all information needed for our generation to acknowledge the importance of Islamic accounting and how it will give positive effect to financial statements. That's all from me. Thank you.